Welcome back. Well, let's tell you a little bit more about Vedanta. First of all, let's run you through the 5 big takeaways, what the management said. They said that now they have the potential to deliver EBITDA of $7.5 billion of EBITDA. Most on the street are not expecting them to get to that mark, but for the time being, they're saying that they have the potential to deliver that. Point number one. Point number two is, because the aluminum and zinc operations, there's a lot of capex that's gone in there. So that's going to start contributing, and that will start contributing from this year itself. And Nuvama, in their note, they're saying that incremental cash flows from these assets could be $1 billion itself. So that's the second factor. The management on their debt front, they're saying that there's going to be a reduction at Vedanta Resources. Let's get some of those graphics up. Vedanta Resources by $3 billion by FY27. And they've also promised that in the listed entity, which is Vedanta Limited, which all of you all will be tracking more than the Vedanta Resources problem, they're saying no incremental debt comes into Vedanta Limited. How do they do that? That's because there's going to be monetization of the steel assets that they've been talking about. Earlier, the street was bracing for Q4 if in case they could get it done. Now they're promising that by Q1 FY25, they'll get it done. And on the demerger, they're saying that unlocking of that will happen in FY25. So you'll have many more Vedanta listed companies. So you can pick and choose whether you want to play aluminium, zinc, and the other assets, oil and gas as well. What are brokerages saying? I have two of them. Nuvama, they remain positive on the stock post the analyst meet. So they have a buy rating out there. They've marginally upped the target price by 23 rupees odd. They are also working with the dividend payout of around 40 rupees each in the next two fiscals. So they're saying there's a dividend sweetener coming in there. And they're also up their EBITDA estimates by 2 to 3% to factor in higher power sales. CLSA, well, they have upgraded the stock from sell to underperform, and they've upped their target price from 230 to 260. All eyes are now on delivery of Mr. Anil Agarwal and his team. For the time being, they are noting that at the parent level, they've got things sorted out on the debt front. And out here, you won't see any more pressure. So let's see how this goes.